Hey everyone, welcome back to Corporate Decoder, the place where we peel back the layers of corporate filings to find the juicy bits. And oh boy, do we have a juicy one today. It's about a company that might be trying to make a big splash with a reverse split. Before we dive in, make sure you hit that subscribe button and ring the notification bell so you don't miss out on our insights. Also, we have a community growing on Discord linked in the description below. Come join the conversation. Today we are cracking open a report from Sunshine Biopharma Incorporated. Now, this isn't your typical quarterly earnings report filled with pages and pages of financial statements. This is a Form 8K, which is basically a heads up about a significant event that has happened. So what is the big event? Well, it all revolves around something called a reverse stock split. Imagine if you have 10 shares of a stock and then suddenly those 10 shares become 1 share. That's the basic idea of a reverse split. Why would a company do this? Well, sometimes it's to make their stock price look more respectable, especially if it is trading for pennies. A higher stock price can sometimes attract larger investors, or make the stock seem less risky. And who is making this call here in the report we see it is Dr. Steve N. Slilerty, the Chief Executive Officer, who also happens to hold the majority of the voting power for Sunshine Biopharma Incorporated. He, by written consent, has authorized the board of directors to enact this reverse split. They're looking at a ratio of up to a 1 for -10 split. That means for every 10 shares you own, you could end up with just 1. The board gets to decide if and exactly how this split will happen, up to that 1 for -10 limit. Now, this consent from the shareholder, Dr. Slilerty, becomes official 20 days after they send out some important information to other shareholders. It's important to note that Dr. Slilerty is a pretty significant shareholder, holding around 96% of the company's voting power. That is a lot of control in one person's hands. This impacts the company's common stock, which is what regular people usually buy. The ticker symbol for this is SBFM, and it is traded on the Nasdaq stock market. They also have something called common stock purchase warrants with the ticker SBFMW, also on the Nasdaq. Now, typically a reverse split is done to boost the stock price. Think about it, if a stock is trading at, say, 10 cents a share, it might not look very appealing to bigger investment funds. But if, after a 1 for -10 reverse split, that stock is now trading at $1 a share, it starts to look a bit more serious. This move often signals that the company is looking to get into compliance with stock exchange rules, like the minimum price requirement to stay listed on exchanges, like the Nasdaq. If a stock price stays below a certain level for too long, it can get delisted, which is a pretty bad situation for any publicly traded company. Now, we don't have extensive financial tables in this particular 8K report. These events are more about significant corporate actions rather than a deep dive into quarterly revenues or profits. However, the fact that they are considering this reverse split tells us something about their current stock performance and their strategy for remaining on a major exchange. It is a way to try and reset their stock price without necessarily needing to generate massive new sales immediately. So let's look at the broader picture here. Sunshine Biopharma Incorporated is in the business of developing new medicines, which is a long and often expensive process. Companies in this field can have very volatile stock prices, going up and down based on trial results, regulatory approvals, and funding rounds. A reverse split is a tool, and like any tool, it can be used for good or bad. In this case, it seems to be a move to maintain their listing, which is critical. What this really means is that the company, likely facing pressure from exchange rules due to a low stock price, is taking this step to keep their stock trading on Nasdaq. It is a signal that the current stock price is not where they want it to be, and they are using this mechanism to try and improve its perception and compliance status. Looking at this filing, the main story is the proactive measure taken by a significant shareholder and the company's leadership to address a potential listing issue. It's not a direct indicator of financial performance in terms of sales or profit growth, but rather a strategic maneuver to stay in the game. Now, to wrap things up, my take on this is that Sunshine Biopharma Incorporated is taking a necessary step to maintain its public trading status. While a reverse split itself doesn't magically make a company more profitable, it is often a prerequisite for other positive developments. The real test will be what the company does after this reverse split. Can they leverage a potentially higher stock price to secure more funding, advance their drug development pipeline, and ultimately drive real revenue growth? The risk here is that if the underlying business doesn't improve, a reverse split can just lead to a higher stock price that quickly falls again, potentially setting them up for another reverse split down the line. It's a bit like rearranging the deck chairs on the Titanic if the core business isn't sound. However, for a biopharma company, staying listed on a major exchange is crucial for access to capital markets. So, what is your take on this reverse split strategy? Do you think it is a smart move for Sunshine Biopharma Incorporated? or a sign of underlying trouble? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. Your engagement really helps us bring you more content like this. And don't forget to subscribe and join our growing community on Discord. Thanks for watching, and we'll see you in the next one.